Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It's the final Fed meeting this year, and investors are looking forward to a rather unsurprising outcome of the Fed lowering its interest rates by another 25 basis points in today's meeting. But investors would be closely watching out for next year's projections as it is riddled by uncertainty regarding the incoming administration of Mr. Trump. All this in the backdrop of a good retail sales number from the US yesterday, but I'm sure there are a lot of details which we need to look at. Good morning, JK. Your thoughts on yesterday's data and the upcoming Fed decision?
Hey, good morning, Swaraj. Yes, I think this may be one of the few Fed meetings where the expectations for a surprise are very low. In fact, always I cover the FOMC event live, but this time even my expectations are very low for any kind of surprise. And there's not too much of uncertainty with 0.25% with the market overwhelmingly expects that will be delivered. People will hear out the chairman's press conference and also the summary of economic projections, but I think everything is overshadowed by what's going to come about for the economy when the new administration takes over next month. And well, most of messages will be consistent from the Fed with what Fed speakers have been saying quite a lot recently, that the risks remain on both sides of their mandate. In other words, the pace of cuts will slow, including a January pause mostly. And most of the committee believe that we will now once again be about as restrictive as we need to be. So it's going to be mostly a non-event as far as Fed is concerned. And of course, it's also coming in the month of December when the market participants are unlikely to take any big stand on either the currencies or other asset markets as well. The same goes with the other central bank meetings, which immediately follow, like tomorrow morning, Bank of Japan, and then we have Bank of England following it. Bank of Japan, as we explained in earlier session, not likely to change their policy. Once again, the uncertainty about the Trump tariff policies, etc., and its impact on Japanese economy will be, in their mind. So they keep their policy unchanged tomorrow. We'll see whether they indicate any possible change in January. Bank of England, after a very weak GDP number, 2 consecutive months of negative growth, there were some expectations that Bank of England might go for a rate cut this month, but I think that got nullified yesterday when the employment report was announced and the wage pressures were seen much higher than expected, 5.2% versus 5% expected, and including bonus, it was 5.2 versus 4.6 expected. So it was a kind of decider as far as the Bank of England is concerned, not to cut the rate for now. So even end of the year 2025 rate cut expectations from Bank of England have been cut down drastically. That said, yesterday we did have a lot of macro data, although there was very little reaction to the data from the markets. We had retail sales number that beat expectations, coming at 0.7% increase. Last month's number was also revised upwards. Of course, the control group of data, retail sales, which excludes some of the items like transportation and energy, this came in line with the expectation at 0.4%. All in all, of course, retail sales was strong and continued to reiterate that US exceptionalism is continuing, and there is no reason for people to be moving away from US as a destination for investment, and the US dollar's strength as well. There was some, of course, some negative news continuing on the manufacturing side, as industrial production again fell last month. And of course, the manufacturing is one side where US economy has continued to struggle. And whereas market looks more at consumption, which is remains strong and keeps the economy going. Very sorry. On the European side, we had mixed data from Germany. We know the business sentiment data EFO was once again very poor. I know market really did not expect anything better from Germany, but at the same time, the economic sentiment of the ZEW survey was much better, both for Germany as well as Eurozone. Perhaps there were some market men who were expecting better times in the new government that will be in place next month after the midterm election. And so those future expectations have led to some improvement in the ZEW indication. The Euro region as a whole also showed ZEW economic sentiment coming at much higher at 17 versus 11.6, and market was expecting 12.2. So on the whole, these surveys justify continued easing by ECB in their upcoming meetings. Now, the target for the low rate from ECB in this cycle is expected somewhere near 2%. On the rupee, yes, I think the trade data has, of course, been next macro factor which has impacted it negatively, continues to impact the rupee negatively. We have seen again marginal new lows yesterday, although the pace of fall in the rupee continues to be gradual, as hitherto seen for several months, and whether that will change in the coming days is something that the market is keenly looking up to. But in my view, I think at least till December, because of thin market conditions, the central bank authorities would be keen to see that the stability in the exchange rate is maintained. But we have very often seen that the new year comes with a few surprises as far as even the rupee market is concerned. And one more reason why possibly the rupee is not moving weaker too much is the short-term tightness in the liquidity, because if you go short, if you buy dollars, you're going short on the rupee, and the call money rates are much higher than the policy rate now by almost 30 basis points, and that is keeping the market from keeping much long positions in the dollar as well. So I think these conditions are ensuring that the rupee is still stable, but on a weaker side. And I think that will continue for some more time. So we have more data in the coming days. Of course, UK inflation data will be out today, along with the final reading on the Eurozone inflation as well. And we will get the US GDP data much in advance this time because of the December holiday period. So the final reading on the Q3 number will be announced this week. So market looks forward to those things. But I think once this week's data is over, most of the big players would be shutting down their computers and looking forward to the Christmas and the New Year holidays. Thank you.
Thank you, Jagga. And just quickly summarizing, Fed's meeting is expected to be unsurprising, likely to lower rates by 25 basis points. And the likely pace of cuts will slow from next year is something the Fed might focus on, or the narrative they might focus on. Tomorrow morning, there's also the Bank of Japan meeting, likely no change in rates. Investors would be looking at whether they indicate anything about future rate hikes. When it comes to the macro data released yesterday, retail sales from the US beat expectations. Even the control group, which is used in the GDP calculation, was as per expectation. It reiterates the US exceptionalism narrative, which is ongoing. But the manufacturing side showed some weakness. Industrial production data was weaker. When it comes to Europe, the other side showed the mixed data. Business sentiment was poor from Germany, but the economic sentiment showed some improvement. For rupee, we continue to trade weaker, marginal new lows every day, and the pace of fall continues to be gradual. Very interesting what JK mentioned on the liquidity front. The call money is around 30 basis points higher than what the repo is trading. So it is indicating some sort of liquidity tightness in the Indian banking system. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.